What's up, guys? Welcome back to the channel. This is still me, Solomon Wisdom, aka Born to Trade. And in today's lesson, I'll be covering the candle range theory. The candle range theory is actually a profitable trading strategy. If you learn how to analyze the candlesticks and understand how to analyze a candle as a range, you can take advantage of the candle range theory as a strategy and make good money from the financial markets. Now, the candle range theory is of many types, but the one I'm going to focus on into this lesson is the three candle pattern, which you've seen at the left side of the charts. Now, we have three different candle range patterns, just like I said, but I'm going to cover the three candle CRT and I will briefly touch on the inside candle CRT, okay? So this is what I'll be covering in today's lesson. If you're looking at the particular chart we have right here, you can see we have three candles pattern right here. And one thing I said you should understand firstly is analyzing the candle as a range. Now, first thing first, we have a three candle pattern right here. This particular candle right here, we're going to consider it as a range. And the second candle is the manipulation. That is, the second candle manipulates the range. So we see this second candle right here, which is a pin bar, is going to manipulate the range. And the manipulation means it could manipulate either the high of the range or the low of the range. It doesn't matter. What we just want to see is the manipulation of the range. And the third candle we have right here, the third candle is the distribution. The first candle, price ranged. Now, the second candle, you can see it's the manipulation. And the third candle right here is the distribution. So I'm going to take my time to break this down in simple form. So if you have basic knowledge about the candle range, it's going to help you understand how to trade it and make good profit in the market. And I'm actually going to give you an entry pattern, which is going to help you get involved, not just seeing this concept, but being able to get involved when it presents itself in the financial market. So if you're interested in concepts like this, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade. If you have interest in joining our free Telegram community, the link is in the description. You can click the link and join our community today. So I've given a brief explanation of the three candle CRT. Now let's talk about the inside CRT. Now, just like I explained that a candle is a range, that a candle should be considered as a range, you can agree with me that this is a full bullish candle right here. And every candle has the opening price, which is here, and here is the closing price. You see, this body at the top is the closing price, and the body we have right here is the opening price. Now, this is the low of the range, and this is the high of the range. You should understand that. So this simple illustration right here explains the exact same thing, where we have the opening price of the range, and after price opened, what do we see? We have price reacting to the downside, then retrace back to the upside right here, got to the high, then retraces, and it closed this way. So this is how the candle moves. Now, if you go to a lower time frame, let's assume that we are looking at this candle on the daily time frame. Then you decide to jump to a lower time frame, just like the 1 hour time frame. What you're basically going to see is that here could be the opening price of the candle. Then price is going to range a little because price just opened. So after the opening, we're going to see price retraced a little, which is going to be the manipulation, because the opening price right now is going to serve as the range. At this area, we have the manipulation. Now, after the manipulation, price starts to trend, right? Here we have a pullback, and finally price formed the high and finally closed back inside the range. So this means that the low of the day was formed possibly during the London session, and the high of the day was formed during the New York session. So this is how price move. So if you see a full body candle on the higher time frame, this is basically what you're going to see on the lower time frame. This price action where price range manipulates, then trends and close back inside the range. This is how price moves, okay? When you see a full candle on the higher time frame, note that is a range on the lower time frame. So this type uses a single candle as the CRT, which means it has a range, it manipulates and distribute. This is exactly what I'm trying to explain. This is the range, price manipulates, then distributes over here. And if you look right here, this is exactly what we have over here. where we see price forming a range, the full candle right here being a range. Then this is where price manipulates, and the push to the downside over here is what we call a distribution. I hope I've been able to make this clear, that this same price action we have right here could occur on one single candle. And another thing I want you to take away from here before we enter to the next stage of this lesson is understanding that the candle range theory is actually very similar to the power of three. The only difference when you try to trade the power of three concept is that we usually have a range, right? We might have a range, then the manipulation and distribution. So this is what the power of three represents, where we firstly identify a range, right? We have this range right here. After price range, we're going to identify the manipulation phase. After price manipulates, this is where we're going to see the distribution. This is what power of three represent. That is the AMD power of three. So if you want to consider price as a range when you want to trade CRT, this is what you're likely going to see. This is where price ranged. Okay, this is the price range as a whole, because this is a single candle, which is a trend. Then finally price closed at this particular point. Now, the next day, what are we going to anticipate? When price is opening for the next day, remember, this is actually the high of our range. That is the opening price, possibly the opening price, and this is the low of the range right here. Now, when price is opening the next day, the next candle, this is what we're going to anticipate, where price is likely going to take the liquidity we have underneath this low. And after it takes the liquidity, we're still going to anticipate that price is going to close back inside this range, right? Price is going to close back inside this range. And after that, this is where we're going to anticipate the distribution, right? This is where we're going to anticipate the distribution. Now, let's try to do the markings once more. Firstly, we have the whole price range right here. Secondly, we have a manipulation right here. You see, these are manipulation phase. And finally, this is where we have a distribution phase, okay? So you see, it's very similar to the AMD power of three. The only difference is that in this case, we are identifying a whole price movement as a range. But when we trade power of three, we usually look for accumulation areas in the market, right? Very similar concept. So let me give you the framework for trading the candle range theory, okay? So this right here is going to be the candle range framework. This is going to help you know the exact way you can trade the candle range theory and make the most out of this particular concept, okay? How you're going to trade this concept and make good money, not just making good money, but trading it the right way. You know, sometimes you might try to trade a concept, but the moment you don't understand the concept, you see yourself making mistakes. Now, the candle range theory I'm going to be covering is the one that has the three candles, the one that consists of three candles, which is this particular one we have right here, okay? The three candle CRT. This is what I'll be covering in today's lesson, okay? The three candle CRT. Now, let's go. Now, let's talk about the first candle. Let's talk about the first candle. Now, the ranging candle. The first candle is going to serve as the ranging candle. Now, what are we expecting? The first candle established the range, but this doesn't imply consolidation. And this is exactly what I'm saying. That first candle, it doesn't have to be a range. It could be a full body candle. Instead, the entire price action of this candle is treated as the range framework. So you see, this is a full candle right here. And you can agree with me that this is the high of the range and this is the low of the range right here. You can agree with me that this is what you're likely going to see, where price is trending on the lower time frame. So once you see this trend on the lower time frame, still have in mind that this is the high of the range, and this we have right here is the low of the range. We're going to consider the entire candle as a range. It doesn't have to be a consolidation, right? It doesn't have to be an accumulation area. As long as it's a candle that has full body, is a range, okay? So this is it about the first candle. Now let's talk about the second candle. Now the second candle is the manipulation candle. The second candle is where we expect the manipulation. The second candle manipulates the first candle's range. often forming a turtle soup. Two scenarios can occur. So firstly, this is the second candle we have right here, where we have a pin bar. And I said that the candle manipulates the first candle's range. So this second candle, what we expect this second candle to do is to manipulate the first candle's range, and it forms a turtle soup. And I hope you all understand what turtle soup means. Turtle soup strategy is where price sweeps an old low or an old high. So in this particular case, this is the high of the range, and you see price sweeping the high of the range. And it doesn't necessarily mean it has to be the high of the range. Price could sweep the high of the range or the low of the range. It doesn't matter. If price sweeps the low of the range, it's nice. And if it takes the high of the range, it's nice as well. Now, I said two scenarios can occur. Now, what are the two scenarios? Now, if the second candle closes inside the range, the likelihood of a reversal towards the opposite end increases, giving strong conviction in the analysis. Now, if you look closely on this particular chart, you see this is the high of the range right here. And what are you going to notice? You see the second candle moves back into the range as it sweeps liquidity with this sweep we have right here. What else did it do? It moved back inside the range and closed inside this particular range. Now, when this happens, it means that it has high probability of playing out, okay? It means that the probability of we getting a continuation to the downside has now increased, because this is our expectation. Since price was able to sweep the liquidity above this high, closing back inside the range, it means that the probability of price continuing to the downside has now increased, okay? Now, this is the second scenario we have right here. If the second candle closes outside the range, okay? In this case, if the second candle is not able to close inside the range, but it closed outside the range, the probability of reversal drops while the range remains intact. Caution is required. Now, this simply means that when you see price closing outside the range, because this is the high of the range right now, and you see price has now closed outside this particular range, and you can agree with me that when price close above a high, that is going to be considered as a break of structure and not a liquidity sweep. In this case, this is a very clear liquidity sweep right here. But at this particular point, you see, this is just a break of structure. Price broke structure at this particular point instead of sweeping liquidity. So when you see a break of structure, price breaking above the first candle's high, this simply means that the probability of this playing out is less, right? You're going to have low probability of this particular one playing out. So when you move to a price chart, I'm going to advise you focus on this particular first one right here, the first scenario where price sweeps the liquidity above this particular high, or sweeping the liquidity at the low, depending, then closing back inside the range. Okay, I hope this makes sense to you. Now let's look at the last scenario. Okay, let's look at the last candle. So the third candle handles the distribution. This is where we have large candle moving to the opposite direction of the sweep. Now, what smart money do at this particular area is, after we've seen price sweeping the liquidity above this particular high and closes back inside the range, this is where smart money is going to push price to the opposite direction, that is pushing to the downside. And this is when we're going to target the sell side liquidity. Now, the first target for distribution is the 50% of the range, while the second target is the opposing end of the range. So this sell side liquidity we have right here is actually your second take profit, while your take profit has to be the 50% of the range. Now, if you measure right here, where is the 50% of the range? You can agree with me that here right now is the 50% of the range, and this is where you could take your first profit, and your second profit could be the low of the range. So I hope this makes sense to you. The major thing you need to identify and understand is the first candle, which is the range, the second candle, which is the manipulation, and the third candle, which is the distribution. This is a very simple concept. So let me show you live examples, and I hope you understand better. I'll have it in mind that a candle remains a range. So let's see live examples. But before that, let me quickly introduce our mentorship. Our advanced smart money mentorship is still running, okay? The second batch of our mentorship is running currently. And if you need a community where you could trade with, where you see traders of like minds, you can decide to enroll for our mentorship. And this is what our mentorship comes with. We have a course where we broke smart money down. You're going to have access to the course. You're going to be part of our weekly chart breakdown. You're going to have access to our support group where you're going to receive support from time to time. If you have any challenge, you could ask question and you're going to get support. You're going to be part of our premium possible trading opportunities, and you're going to be part of our weekly Zoom meeting. So this mentorship costs $216. This is actually a discount price. If you look at the right-hand side, you can see the original price over there. So these are the payment methods which you could look to consider. So if you have interest in enrolling for a mentorship, you could be part of our community, okay? But if you think you are doing well, you can focus on yourself and work harder as well. But if you think you need a community of traders, community of like minds, you can decide to enroll for our mentorship, okay? So back to the lesson. Let's see a live example. Just like I said, we'll be doing this on the higher time frame, okay? We'll be doing this on the daily time frame. So this particular chart right here is CAD CHL price chart, and the particular date here is on 11th September. The particular candle I'm pointing right now is the 11th of September this year, 2024. So let's read the price action we have right here. Remember, I said a candle is a range. So this particular full candle you see right here is actually a range. Now, where is the high and the low of this particular candle? This is the candle high right here. Can agree with me that this is the candle's high and this is the candle's low right here? What is our expectation? What are we going to expect right here? One thing you have to notice, if you remember when I explained the inside CRT, where the CRT occurs on a single candle. Now, let's try to mark the opening price of this particular candle. So this is actually the opening price of this particular candle. Let me give it a different color. Okay, let's use the red color and see what it does on the lower time frame. So this is the 1 hour time frame right now. And what can you clearly see on the 1 hour time frame? On the 1 hour time frame, you can see here is the low of the range, and this is the high of the range right now. Now, secondly, what are you going to notice? You're going to notice that the red line right here is actually the opening price of the range. You see, price opened at this particular area, and what did it do? It reacted to the downside. Price reacted to the downside means it's simply sweeping the liquidity we have underneath this particular low right here. You see, price sweeps the liquidity. Immediately, price sweeps the liquidity underneath the low. What do we see? We have a reversal to the upside, which now pulls back for an optimal trade entry pattern. Finally, it's moved to the upside to pull back right here. So this is what candles do, okay? And you see we have a CRT right here, because if you try to do your markings right now, you're going to understand that this is the range right here, okay? This is the range right here, right? This is actually a range based on what we've seen on the lower time frame. That's the range. And secondly, this is where we have the manipulation. You see that? This is where the manipulation occurs, and now we have the distribution. And you see, this is what price does. So this is just a single candle, and we've tried to break it down to see what happens. But this is not why we are here. What we want to do is to study the 3 candle pattern, where this candle range theory occurs on a 3 candle pattern. So back to the daily time frame. So we are back on the daily time frame, and this is where we have the first candle. I said that the first candle is the range. And if you could remember, I said the first candle established the range, but this doesn't imply consolidation, okay? And as you see, we went to the lower time frame. The candle was not consolidating. Instead, it was trending on the lower time frame. The entire price action of this candle is treated as the range framework. So the entire price action we've seen on this particular candle is considered as the range. Now, let's press price forward and see the second candle that is going to print. So here we have the second candle, and you can agree with me with what I explained. So in this particular case, price sweeps the liquidity above the high and close back inside the range. So when you see something like this, what does this explain? This explains that we're going to have what? The continuation to the downside. And when I talked about the second candle, I said the the second candle manipulates the first candle's range. And in this particular point, it sweeps the liquidity above this particular high. And if you remember, I said if the second candle close inside this range, which is what we're seeing right here, the likelihood of a reversal towards the opposite direction increased. So in this particular point, you see price sweeps the liquidity close back inside the range. This simply indicates that the probability of this playing out has now done what? It has increased. Now, there was something I didn't point out. So we called it a three candle pattern, but sometimes we might not really see three candles. So I was supposed to explain this when I was talking about it step by step during the third step. So I forgot to do that. Sometimes we might not really get maybe full candle reversing to the opposite direction immediately. Okay, now our expectation is that we're going to see a candle like this, which reverse to the downside immediately. So sometimes we might not really get a candle like that. Sometimes price might do that with series of candles, but the most important thing is understanding that price is going to target this sell side liquidity in this scenario. Okay, now let's press price forward to see how this plays out. And we see we have series of candle, 1, 2, 3 candle, and the fourth candle sweeps the liquidity underneath the low and moves back inside the range. And I hope you all can clearly see what we have right here. Okay, all can clearly see what we have. The third candle sweeps the liquidity underneath the low. So this particular one had multiple candles, and that's why I said CRT is of many types, but I just want to talk about the 3 candles. But fortunately, price printed 4 candles before it got to our target. But have it in mind, there are some scenarios where price moves directly to the target with the third candle. Now, if you zoom in right now to analyze what price is doing right here, what can you see? You can clearly see that we have a very good candle right here, and this is a range, right? This candle is a range. Where is the high of the range? This is the high of the range. And where is the low of the range? This is the low of the range, okay? The second candle sweeps the liquidity underneath the low, moves back inside the range. So where is your profit target? This high right here is actually your profit target. But the truth is that trading this kind of pattern is not actually profitable, because what you can see is that price is already close to your profit target. But if I try to play price forward, what can you see? The third candle respects the analysis. So that was exactly what I was saying. In some cases, you might see where the third candle moves to the profit target immediately. So this particular one respects the 3 candle pattern. So what you might be wondering right now is, how can we get our entry pattern right now? How can we get involved in this particular setup? Now, let me use the next example to break it down. So I'm going to use this particular chart right now to break it down. And this particular example is on CHF JPY. This is on the daily time frame. And this particular price action occurred on 9th of July, 2024. Okay, it's on Tuesday, on 9th of July. So in case you want to do your own personal back test. Now, from what you can clearly see from here, you can agree with me that this is the high of the range, right? This is the high of the range, and this is the low of the range. So a lot of people might actually ask me, how can I get involved in this particular trade setup? You've seen that it has high probability of playing out and it gives good results in the markets. Now, how do I get involved? Now, as always, how you can get involved in this particular price action is always waiting for a shift in market structure. When price sweeps the liquidity, with your common sense, you should know that this has to be the entry type. A lot of people might actually decide to do it in a different way, where we might see price maybe react, right? Give us the shift in structure, right? When you identify the clear shift in the market structure. So this is where a lot of people might actually decide to enter with an order block entry from an order block. You see, we're definitely going to have an order block right here, which a lot of people might decide to refine. Okay, some might decide to refine the order block maybe to the extreme level, right? You could look to do that. And some people might actually decide to enter from a fair value gap. So this is based on personal preference. So let's break this price action down and let's see what it looks like. So on this particular price action, what you can clearly see is that this is the high of the range and this is the low of the range. So let's go to the 1 hour time frame. Now on the 1 hour time frame, you can clearly see that this is the same range right here. This is the high of the range and this is the low of the range. And if you actually want to read one particular candle, you can see that we have the exact same price action where price sweeps the liquidity we have underneath the range. You see, price sweeps liquidity because the opening price is definitely going to be somewhere around here, sweeps the liquidity, be giving us the manipulation, then react to the upside. We have the retracement where we have the optimal trade entry pattern, then price react to the upside. But that's not what we're going to cover for today. Let's focus on getting an entry pattern. So at this particular point, we have the high, the low right here. So playing price forward to see what price presents right now. Now, this is where we have the clear liquidity sweep of the high, right? Now we have the liquidity sweep of the high, and now we're getting the retracement. And you see how price breaks underneath this particular low right here. I hope you can see that. We have price breaking underneath the low, closing underneath this low. Now, this is where a lot of people might decide to get involved. I said some might look to get involved from this fair value gap, and you might see a lot of people selecting the extreme order block. And you can agree with me that we have a very good order block right here. So the order block right here is actually going to be your entry zone, okay? Playing price for a little bit. Now you see price starts to retrace back into our order block. So price retracing back into our order block, and what can you see? Price is now ranging at this particular area. I hope you can see that. This is price building a range. So this is another thing you have to pay attention to while trying to trade this particular pattern, because you can see that we have a build of liquidity at this particular point. So this build of liquidity has now increased the probability of this particular setup playing out. Okay, so let's try to see what this looks like on the daily time frame. So on the daily time frame, what can you clearly see? You can clearly see that price has now swept the liquidity we have above this particular high. I hope you can see that. Not just sweeping the liquidity above the high, swept the liquidity, closed back inside the range. Now, what is the expectation? The expectation is that immediately the third candle opens, immediately the third candle opens at this particular area. Once the third candle opens, we're going to anticipate that price is going to move directly inside this particular zone, okay? Once price moves back inside our order block, that is when we're going to anticipate the reaction to the downside, okay? When the third candle opens, which is the distribution candle, this is where we expect it to tag us into a trade and moves to the opposite direction. So back to the 1 hour time frame. Price builds liquidity at this particular point and now taps into a zone, and you can see that massive reaction. You see, immediately price taps into a zone, that's the distribution candle opening at this particular point. You see that massive reaction to the downside. You can see how massive this reaction is, okay? So this is it about the candle range theory. So let's see what it looks like on the higher time frame, but let's delete this. Okay, let's just see it on the higher time frame. So on the higher time frame, it has failed to print the candle, but let me press price forward. So this is it right now. Hope you can see that the third candle taps into a zone and we have a massive reaction to the downside. And this is it about the candle range theory. But another thing you have to keep in mind is that context is very, very important while trying to trade the candle range theory, okay? Trading this concept gives good money in the financial market. It can help you make good profits from the market, but context is very, very necessary. The truth is that to apply this particular concept effectively, for you to be able to apply this particular concept effectively, you need to understand time frame alignment. This involves aligning different time frames based on your trading style and providing a solid logical framework for top-down analysis. You need to understand top-down analysis very well, understand time frame alignment very well, understanding the fractal nature of the market, and the most important thing is understanding key areas in the market. When you combine this with key levels in the market, this is actually going to help you understand it better. So today, I've been able to explain this particular concept, but from next week, I'm going to talk about context, okay? So you understand the areas you're going to find this particular candle pattern and what you're going to expect, because there are areas you're going to see these candle patterns, it has low probability, and there are areas you're going to see the candle pattern and it has high probability. So if you don't want to miss that particular content, consider subscribing to this channel. By next week, I'm going to make a different lesson where we talk about contest, where you're going to see this and it has high probability and how you can align it with different time frames. Okay, this is what we're going to cover for next week. So consider subscribing to the channel, and you can as well join our free Telegram community. Any updates about our lessons or anything, I do that on the Telegram community. So subscribe to the channel and join the Telegram community. So thanks very much for watching this particular one. See you in the next lesson.